Hello and welcome to TNM TV News. I'm John Cumming, editor of the Northern Miner. This week we bring you an interview with Frank Holmes, CEO and Chief Investment Officer of U.S. Global Investors. A self-described optimist, Holmes discusses what's in store for the global economy and gold stocks. Mining Markets editor Alicia Hyatt caught up with Holmes in Vancouver recently at the World Resource Investment Conference.
There's a lot of panic in the markets about the Eurozone, about the U.S. economy, and now about China. How ugly do you think this is going to get?
Well, I think the contagion is quite significant in respect that most people think that China only exports to America, and in fact, China exports more to Europe than they do to America. So you're starting to see a slowdown impacting it. But the best part of that is that China is responding quickly, and the responses from 2009 was to increase consumption. When you take a look at China's GDP, what portion is from exports and what portion is from domestic consumption? It's gone from 36 to 52%. That's a very positive direction. Two, in this past quarter, you've seen nothing but stimulus programs taking place in China to try to slow down the drama that's taking place in Europe. However, the drama that's taking place in Europe with Greece, etc., will have huge ramifications for French banks, because most of those French banks sold their gold to buy Greek bonds. And they've leveraged their balance sheets 30 to 1, and they have all this bad debt that's basically in a default. And that's what's creating this calamity in the marketplace. How long will it last? Probably for another 6 months to a year.
Some reports have suggested that commodities demand from China has peaked. Are we going to see the end of the supercycle here?
No, I don't think we're going to, not unless the world's population stops. So remember that the difference between the 70s and today was 3 billion people versus 7 billion people. And GDP per capita is substantially greater. China and India were only 2% of the world's GDP in the 70s. Today, they're pushing 20% and growing. So I don't think it's over. I think what you have is in the great equity supercycle in the 80s and 90s, you had Desert Storm. You had the crash of 87 where people lost 40% of their stock market wealth in 2 days. Hong Kong shut down for 2 weeks. But still the market roared on for a 20% compounded growth rate over 20 years. I think the same thing's taking place here. It's part of a slowdown in different parts of the world, but I think this population growth and the embracing of people want to have. Look at this beautiful city. Look at this infrastructure. This is what they want in emerging countries.
So investors have really been spooked by the markets and the economic uncertainties in the world, have withdrawn from equities. What do you think it will take to see that change?
Leadership, political leadership that is not a blame game, that is selling hope of, and creating jobs, infrastructure jobs. Right now, it is all about we're going to tax more. It's not going after anyone that's successful. They're going to tax, and this will be the best way to remedy this problem. No, it's not. So history is replete with this. The best way is to sell hope, a vision of job creation, of renovate all the airports in America, and refurbish everything and create something that's sustainable for job creation.
You gave a talk here yesterday, and you were saying that basic materials and energy stocks are undervalued compared to tech stocks like Apple. Why is that, and when do you see that changing?
What I've been trying to help investors to appreciate is what is a need and what is a want. The want is the Apple, the iPhone, the iPad. These are wants, but to make them is a need. So the basic materials to make such any type of a product like an Apple, they're much more undervalued. In fact, Apple is bigger than all the basic material public companies in America. Apple stock is bigger than all the utilities that are public in America. But you need those utilities to recharge your iPhone and your iPad. And coupled with that, telecom. One stock is bigger than the whole telecommunications. Well, your iPhone's not going to work. They're not going to function with the telecommunications. So there's a disparity between what people need and what they want. And many of these companies in the telecom sector, in the basic material sector, in the energy sector, utility sector, they are offering dividend yields higher than a 10-year U.S. government note, and they have less debt on their balance sheets on a relative basis. So I think they're extremely undervalued, and the average investor is way underweight this asset class.
So is it just a matter of time before they realize the value there?
I totally agree. I think it'll take place, and because those needs are not going to go away.
You also pointed out that gold doesn't generally do well in years when there's a U.S. presidential election, but there are also a lot of positive factors for gold right now. So how do you see that playing out in terms of the gold price?
In particular, gold stocks don't do well. And we've already been seeing gold stocks have been bifurcating, moving away from gold bullion. Let's just look at the math of markets, and that's what we like to do at US Global. We like to look at historical patterns, and we love this game because you can't do it in Vegas. You can count the cards. So odds favor stocks to have a difficult time this year and next year to be explosive, based on the past 60 years of presidential election cycles. Now, short term, gold stocks are due for a big rally. We wrote about this a couple of weeks ago, and we showed the math of markets, the volatility of the dollar being up dramatically and gold stocks being down what's called 2 standard deviations. So we think that just like the weather in the northern hemisphere goes from winter to summer, that this mean reversion is taking place in the gold equities. Now, is it sustainable? Are we going to go back to 2 years ago highs? I don't think so, but in a year from now, I think they trade much higher.
Are you recommending people buy gold stocks or gold bullion, or is it a good time?
Yeah, it's a very good time to be buying, and it's a good time but make sure when you're buying these gold stocks that management has an equity stake. What we've seen in our research in the past 3 years, that those companies, the big cap companies where management is actually buying shares, not just getting stock options, but where they have an equity stake in that company and they go out and promote their story and they actually go and buy stock themselves. Those companies have far outperformed the indices by 900 basis points a year. So companies like Franco-Nevada, where Pierre Lassonde and the management team have low salaries, they all have a big equity interest in the company, and they far outperform the Agnico-Eagles and the Kinrosses of the world.
Just to end off, you often talk about the importance of being positive as an investor.
When people are focused on trying to find something right and trying to do something that's right, that they actually discover opportunities more often. And if you are consumed with negativity and gloom and doom and focus on everything that is bad and wrong, then you miss opportunities that are like golden plates put in front of you.
Join us next time when Vancouver staff writer Matthew Keeble reports on his visit to Energizer Resources graphite project in Madagascar. Thanks for watching.